Hi everybody, this is Luis Morales with the Morales Real Estate Group and welcome back to my video blog. Today we have a really exciting blog because we are going to be giving you a quick market update. We've been getting a lot of questions as to what is the marketplace doing, what is projected to happen in 2019. Is the marketplace going to go up? Is the marketplace going to go down? And we're going to answer those questions for you. Make it a great day. So 2018 was a really interesting year for the real estate market. It started off really active with prices going up a little bit, and then it ended up with a lot of inventory coming on the marketplace and then demand dropping. What was really interesting is that towards the end of the year, I noticed a little uptick in the marketplace as well, and properties that weren't selling earlier in the year started to sell once again. So I wanted to let you know how 2018 compares to other real estate years so that we can get a better idea of where we stand now and what is projected for the real estate market. So I'll give you an example. In 2018, in comparison to 2017, the year as a whole for entire Ventura County, we had 2.67 more inventory in 2018 in comparison to 2017. What did drop was demand. So in 2018, we had 7,682 sales. In 2017, we had 8,656. So inventory in Ventura County dropped as a whole by about 11%. Now, when you compare it to 2016, we had less inventory in 2018, and we had less demand as well too. So there was less inventory by 2.23%, and demand, or the amount of properties sold, dropped by 11%. Now, when we take a look at it in comparison to 2015, 2018, we had less inventory by 3%. We had less demand by about 13%. So there was more demand in 2015, more properties were selling, and more properties were selling in 2016 and 17. Now, what I like to do is I like to compare what is happening right now to other market cycles. So for example, if we compare it to the year 2008, we had less inventory by 35%, and there was more demand in 2008. So we had less sales happen in 2008 by about 10%. 2007, we had 45%, or we have 45% less homes now in comparison to 2007, and demand was higher this year by about 10% than 2007. 2006, we had 43% less homes on the available than 2006. Now, the reason I'm comparing it to 2006, 2007, and 2008 is because we could all remember what happened during those years. Essentially, it was a big bubble, and then eventually the bubble popped and prices came crashing down. So one of the ways of determining what is going on in the market cycle is not only by taking a look at what is inventory doing, is what is demand doing as well too. And a lot of it has to do with that ratio. So there's a ratio called months supply of inventory. What that ratio tells us is for every home that is sold, how many properties are active. So essentially, like, let's say that there's 200 active properties and there's 100 sales a month, that would be a 2-month supply of inventory. Let's say that there's 300 active homes and 100 sales a month, that is a 3-month supply, and vice versa. 400 homes to 100 homes is 4-month supply. So essentially it's a ratio. The lower that ratio is, the hotter the real estate market, meaning more of a seller's market that we're in. The higher that ratio is, the more of a buyer's market. So essentially, what I have noticed is that anywhere we're in the 2 to 3, it's still somewhat of a seller's market. 3 plus, maybe more of a flat market. 5, 6, typically prices are coming down. So I want to share these numbers with you just so that you see how we compare to other years. And I'm also going to go over different cities in Ventura County. That way you see how they compare to different years as well too. So if we take a look at the month supply, the median month supply for 2018 for Ventura County was 3.28. For 2017 was 3.02, which means that ratio was lower, which means it was a hotter market in 2017 in comparison to 2018. Now, when we compare it to 2006, 2006 had 3.59, so that was higher than 2018, which means a little bit of a slower market. 2015, we had a 4-month supply of inventory. Now, when we look back at the last market crash that we had, you see that in 2006, there was 6.3 months supply of inventory. So what started happening from 2002, 2003, 2004, 2005, 2006, 7, and 8 is you started seeing this month supply of inventory increasing. Because if you just take a look at supply and demand separately, it doesn't really mean anything. What actually means something is that ratio, because it tells you for every buyer, for every active home, how many buyers are available. So if we look at back at 2006, there was 6.3 months supply of inventory. We look at 2007, we saw that number grow down to up to 9.73. And if we look at 2008, it grew all the way up to 10%. What that number means is that for every home that was selling, there was 10 other properties that were on the marketplace. So that's huge. That's a big number. So in 2006, there were 6.3. Now there's 3.28. So we've been at this number in 2015. We've been at this number in 2016. Pretty similar numbers. Now, if you want comparison to different cities, now we have all the market stats for every city in Ventura County, including the outskirts of Los Angeles and Santa Barbara, but I'll go over a couple different cities. So if you look at Camarillo, 2018, 3.19 supply. Last year in 2000, or the year before that in 2017, we had 2.56 months supply of inventory. So obviously a hotter market. 2016, we had 3.51. 2015, we had 3.85. We compare it back to 2006, 6-month supply, 6.62. 2007, 6.98. 2008, 8.73 month supply of inventory. Now, if we take a look at some of the other cities, as you already know, different markets are affected in different ways during market cycles. If we look at, for example, Oxnard, last year we had a median month supply of inventory of 3.17. 2017 we had 3.24, so it was actually a little bit higher in 2017, the median, which has to do with the marketplace started really high. As you guys can remember, in Ventura County at the end of 2017, we had a fire. What that did is it caused supply to go down to some of the lowest levels that I've seen in the last 5 to 6 years, and demand started up pretty active in at the end of 2017, early 2018. So 2015, we had 4.13. If we compare it to 2006 we had 6.77. 2007, 13.88. 2008, we had 16 months supply of inventory. So Camarillo only had 8. Ventura County had 10. What that tells me is that for every sale, there was 16 other homes available. And as you remember, Oxnard was one of the most affected cities in terms of prices dropping, and it had a lot to do with the ratio of supply and demand. I mean, we literally saw prices slashed in more than half in comparison to maybe some of the other cities. If we look at Simi Valley, 2.79 month supply of inventory. 2017, 2.6. So a little bit higher last year in comparison to 2017. 2016 we had 3 month supply. 2015 we had 3.51. 2006 we had 5.61. 2007 we had 10.66. 2008 we had 9.87. So essentially, this ratio of month supply of inventory tells us a lot about the marketplace. I wanted to compare how we were doing in comparison to the last market crash, just so that we can get an idea of where we're at in terms of the market cycle. I mean, we're still below inventory less than 2006. However, as you know, the marketplace is fluid, meaning that it is consistently changing. It's always changing. It's not stagnant, meaning that we have to monitor the month supply of inventory extremely careful. Obviously, there are other factors that affect the marketplace. For example, interest rates as well too. So we have to monitor that. That affects the month supply of inventory. But we'll continue to give you market updates. We'll continue to monitor the market for you and let you know what that month supply ratio is. That way you can make better financial decisions. This is Jose Luis Morales. I work for the Morales Real Estate Group. We have all of the market stats for every city in Ventura County, Los Angeles, and Santa Barbara. So if you're looking to know what is going on in your neighborhood specifically, please give us a call. Our phone number is 805-228-4672. That is 805-228-4672. Thank you so much. Make it a great day, and we look forward to staying in touch with you. And Happy New Year's. Adios. Bye-bye.